Hi guys, and welcome to the second part uh, of our weekly analysis. So last night we spoke about dollar index, and I shared much of my narrative in regards to directional bias on dollar, which was bearish, and in that regards, when we talk of Euro USD, I'm going to be looking for price to drop down into discount and expansions, taking out buy side liquidity, most of it being internal range, meaning I'm bullish on euro. So I'm not gonna take much of your time because most of the work was done yesterday, knowing what's my narrative on dollar. So meaning on euro USD is the opposite. My narrative is going to be bullish momentum. So I'll be looking for price to trade back into discount for expansions to the upside, right? So I'm only gonna short Euro USD. I'll only short Euro USD on positive news for the dollar, but provided price is in premium, you see, and those will be day trades or even like scalps. But for a long-term view, for a long-term narrative, I'm looking for long trades on Euro USD. Now, some might argue that okay, Ivan, but uh, we've got January is a good example of bearish order block. Yes, I do agree. January is a perfect example of a bearish order block. So is May from last year. It is a bearish order block. But did it provide any resistance to price? No. Price just kept on rallying. Now, why am I sticking to the narrative of bullish bias on uh, on Euro USD? Is because of these guys, right? See these four bullish candles, right? That's a very strong emphasis in terms of candlesticks now. A very strong emphasis to tell me that the bulls are really in control. So I wouldn't want to go against that. That's from a candlestick point of view. And in terms of institutional order flow, you can see since the beginning of December, we have had price creating new short-term highs, right? That's a high that was created in November, another high created in December, another high created in January, and as recently as February, we created a new high, right? So that's a market which is basically telling me that it wants to go to the upside. So this bearish order block, which most of you guys are going to argue that we should be hunting for shorting opportunities there. Yes, but that's only on a short-term basis. You won't want to keep holding of that short. Good example is what happened, I think, last week. You can see there. This is the order block, the gray shaded area. You can see last week, I think it was Thursday. Last week, 15th of March. I think that was a Thursday because it's Tuesday, Monday, Friday, Thursday, no, Wednesday. You can see how price traded into premium and dropped almost like 200 pips, right? So you wouldn't want to stay long in that kind of a trade. You can see how price touched premium and then it dropped, premium and then dropped. So you wouldn't want to stay in that trade for long because this can happen now. You see, the last 4 trading days, you can see how price has started creeping in back into premium. So you only short euro here if you get strong fundamentals from dollar side or negative fundamentals for the euro. See, so now going back to the monthly chart, right? So we've got this monthly bullish OB, bearish OB, sorry. It's not even a high probability, and price is now returned to that level. And we also had this monthly bullish OB. You can see how price just traded through. Yes, there's these drops here. See, there's these drops here on the monthly chart. If you are day trading, right, this drop is almost like, that's like 153 pips. Those are like scalps. You see, you wouldn't want to stay long, because if you stay long in that trade, then this will happen. Price will rally against you, right? So these order blocks here, the two that I've highlighted being bearish, they're not even like high probability. The high probability bullish OB right now on Euro USD is up here, right? And that's quite a long while for price to reach that level. Why is it high probability? Because it's accompanied by a fair value gap. You see, you need to be in a position to highlight these aspects of the market, because they will help you once price reaches at those levels, like when you now go to a lower time frame. So that's a high probability bearish order block, which in most cases, that's what I only look for shorting opportunities. That is, if price reaches that level. So the blue line represents the equilibrium point of this OB. And then all the while price was dropping down, right? There isn't much in terms of support. We've got this bullish order block, didn't even provide any sort of support to price. Price just dropped and continued. You see, this was the period of I think whole of last year when dollar was very strong, when we saw parity in Euro USD, right? So when we look at the price action of euro from a monthly point of view, right? The two OBs that I had highlighted, they're not really of much significance in relation to my narrative, right? But be that as it may, right, they will definitely be providing support if price breaks and goes to the upside. When it returns to those OBs, then you expect price to find a bit of support, like what we have seen currently. See this old bearish order block. Look how price is behaved when it returned to this level. So we can say practically this is what? A breaker of these two old highs. Then price returns. Now seems to be another expansion to the upside. So it's always good to keep that in mind. Now, in terms of discount areas, what do we have? Since we're looking for price to go to the upside, firstly, we've got this imbalance here. That's our monthly imbalance, which is also mirrored on dollar index. This imbalance is mirrored. Now, if this is market inefficiency, if this is a fair value gap on the monthly chart, you'll be expecting price to drop to this level and find a bit of support for an expansion to the upside, right? Now, we've got this down close candle here. Where did price find support? You can see here, we've got a discount area here. Though price is already filled in this imbalance, but still price is finding what? Support and rallying to the upside. Now, in terms of targets, last month high is crucial because there's a liquidity pool there of buy stops. So I would say Euro USD is likely to test the 1.10 50 or even 1.11 price point, right? We should see euro trade above 1.1050 sometime in the coming weeks or so, or maybe tomorrow because of FOMC. But I wouldn't advise you to trade FOMC currently due to the market conditions that are prevailing at this moment in time. So on the monthly chart, you can clearly see we really don't have much in terms of discount arrays. Yes, we've got those old lows there where there's internal range liquidity of sell stops. We also have the fair value gap where we've got a huge discount array that should provide support. Now we're going to go to the weekly chart. Now on the weekly chart, it's imperative, it's quite important that you read what price is telling you. Understanding what price is telling you is very important. So now you can see that this is our monthly market inefficiency, and we are looking for price to test the 1.1050 price point. How far is that price point? A couple of pips. We're looking at about 262 pips on offer on Euro USD. We also have this odd low here. I'm going to highlight the odd low of this down candle right there. Right. It's going to extend. So this down close candle here, and then we had an expansion. High probability bullish order block. But you can see the low of this candle here, right? The low coming in at 1.048. 1.048 low. Below that, we've got a liquidity pool of sell stops, right? We've got sell stops here that are still valid, right? They haven't been ran. That's on the weekly chart, right? So there isn't also much in terms of discount arrays. Yeah, we do have this fair value gap right here. Now this one is inside our monthly imbalance, monthly fair value gap, right? So it's just a case of reading price and understanding what price is telling you, and then you make your decision from that point of view, so that you're just not blind, guys. Don't just look at a chart and decide, oh no, I am going to go long, I am going to go short. Now that's not the proper way to approach your market. Now the reason why I'm looking for longs here is I've already done a thorough analysis on dollar index, and the narrative on that is bearish. So I still expect euro to be quite a good performer this year. We're only like 3 months into the year, and I still feel like euro is gonna perform much better than the other currencies, right? So old high, buy stops above, old low, sell stops above. That's on the weekly chart, and we've got this whole big liquidity void here with a fair value gap in reference to when price action returns to this level. Yes, then this will be a nice area for you to go long, right? Then we're gonna go to the daily chart. Now on the daily chart, now remember this down candle I was talking about, the down candle I was talking about, right? I'm gonna go back to the weekly. See this down close candle here, the one with the liquidity pool of sell stops below the old low. Watch on the daily, right? So that's the daily chart, right? I just need to extend this guy. Just need to expand that guy. All right, and I'm gonna highlight my equilibrium point marked with a blue dotted line. Look how price has been respecting this level, right? We've got a daily bullish order block. In this case, it was high probability up until price filled up the fair value gap. So you got this old low and this old high and this old low. That's our fair value gap. So you see now why I'm saying it's quite important that you stick to your narrative. Yes, these drops are happening from premium. The drop we saw from last week Wednesday, that's from premium. The drop that we saw from 7th of March, that's also from premium. But what these drops are actually doing is they are reaccumulating in fair value, right? In discount range, in a discount array, in this case, which is a bullish order block. So this drop wouldn't have scared you to go long. You see, targeting this old high here above 1.1030. You see, that's how you have to like approach the market. You see, so once you have a discount area that is in control of price, for which in this case it's this D1 bullish order block, you'll be anticipating it to provide what? Support before expansion to the upside. So you can see right now the rally that we are looking at for the past 4 days. See, the rally of the past 4 days, where is it actually heading to? Right here. You see, that is where it's only going to find resistance, right? Inside this imbalance here. That's where it's only going to find resistance. And you can only short this premium array, only short this premium array on negative news for the euro or positive news for the dollar index. You see, that's when you can only short it. Other than that, no, that's your target from discount. You'll be targeting these areas here as your take profit targets, right? So now when you go to the H4, you can clearly see the picture how it pans out. So you see these drops here, 1 and 2 drops, they're all dropping into discount right at the equilibrium point of our daily bullish order block, and then price rally. When everyone is selling here, you are looking for opportunities to go long. This drop, it's coming back into discount. This is where you're buying and targeting old high or internal range liquidity pool of buy stops. You can see here we've got a daily H4 bearish order block. So you'll be expecting price to find a bit of resistance once it reaches those levels. So yeah, that's my analysis, my narrative in regards to Euro USD. I am going to be looking for longs on this pair, and that also now includes pound USD, right? Pound USD. Your homework now is to highlight your discount arrays, right? Highlight your discount arrays where you are likely to go long on pound USD. Same applies on Aussie dollar. You highlight your discount arrays where you're likely to go long from. You see, so if you are looking for long, say on Aussie dollar, these drops here, they shouldn't even give you any kind of goosebumps or fluffy hair. You see, you shouldn't worry about that. The only thing you have to ask yourself is price dropping into a discount array, which should provide support for me to go long on, right? For instance, you can see here, this is NZD USD. You can see we've got our high probability bullish order block there on H4. We've got a high probability, sorry about that guys, we've got a high probability bullish order block on H4 because it's accompanied by a fair value gap, and you see price dropping into this level. This is where you are going to take your longs from, preferably from the equilibrium point. You can see price is already trying to rally to the upside. You see, so that's how you have to approach these markets. So your assignments, just try to do your institutional order flow analysis on any one of these three: NZD USD, AUD USD, pound USD, because I've already done one on Euro USD, so that you get a picture of how I'm going to be approaching these markets in the coming few days, right? So of course tomorrow it's FOMC, and I duly advise that if you haven't traded FOMC, no, it's always good to stay out or just be on the sidelines and watch how that actually pans out. So yeah, that concludes Euro USD analysis. I'm gonna try and do gold or oil tomorrow evening. That is probably after FOMC, or even maybe Thursday when things have calmed down, because tomorrow is going to be quite volatile in the evening for me to be doing such an analysis video. So yeah, I wish you guys good luck and happy trading. Thank you.